Today I'm going to be talking about Bitcoin and some interesting things I have noticed in the market and give a little analysis on where I think the price is going to be headed, as well as a mini lesson on stop losses and just trying to help you guys out, especially in the specific market type that we are currently in. Right now, Bitcoin is in a very low volume zone, as I have mentioned in my previous two videos. And I think that for a lot of people, it can be a real struggle to try to find a good place to set your stop loss, where a lot of the traditional zones, at least at the moment, are getting manipulated right through. If we look at the market currently, you can see that this breakout to 11,000 would have hit a lot of people's stop losses if they were trying to short at this level. And then finally, right after this false breakout, we then saw a correction and then another false breakout just today, right below this other support point. So you can see that right now there are a lot of false breakouts in the market, and I think that's a perfect time to try to teach you guys some alternative ways calculating a good level to set your stop loss at, so that you don't get hit by these people just trying to manipulate the market, and so that you can still profit off of your trades even in these low volume moments. Now, before I get into this video, make sure to like and subscribe if you'd like to see more content like this. I also highly recommend that you guys check out my previous videos on AutoMoon. They're super interesting and I think you guys would really like them. And finally, I would just like to say that I'm not a financial advisor, so I recommend you do your own research before entering in any positions. Now, first off, let's just get into the market analysis and just some really interesting things that I have been noticing in the market. Now, the first thing I wanted to talk about was Bitcoin's current correlation to gold and the stock market. Now, I know this is something that already a lot of people are going to disagree with, and I agree that I disagree with what I'm about to say. So let me just explain this really quickly. So I agree that Bitcoin does not specifically correlate to gold and the stock market, at least at the moment. However, I do think that this most recent move on Bitcoin was seen on some other markets, and I think it could be interesting to at least talk about the correlation that is currently going on in the market, even if it doesn't stand true throughout the entire market. So let me just show it to you really quickly. So if you see here on Bitcoin, just a general trend that I noticed was this little head and shoulders that we see on Bitcoin. And so you can see here that we have the head, the left shoulder, and then the current shoulder that is developing right now. So what does that make me think? That makes me think that we are going to see, a similar pattern to this head and shoulders on Bitcoin. So right now, although we are in this little correction phase, I think that we are going to jump back up and then possibly retest these resistance points right here. And obviously, I also want to mention that this is not, specifically an exact level. I am a big proponent of not trying to predict the bottom. So although I am saying that there is a head and shoulders in the market right now, I don't necessarily know if we're really on our way back up yet, or if we're going to continue to go lower to form this head and shoulders somewhere a little bit lower and then bounce back up. So all I'm saying here is that I think we have a head and shoulders, and that eventually we are going to bounce back up from this current level, at least in my opinion, without going below this $9,000 level that we hit all the way down here at the head of this pattern. But something really important that I wanted to mention here is this little double top that we saw here, from the head and shoulders, as well as this most recent correction. Now, if we go over to gold, something that's very interesting is that we saw very similar double top with the correction. Now, obviously, there are different explanations for both. Gold saw this correction because the stock market is currently recovering, and so that's why, you have the inverse correlation in gold. If more people are confident in the stock market, then gold is going to go down because people are investing their money back in the stock market, which is a higher, yielding investment. And so if you see here, we had this double top and then the subsequent correction when the stock market started to recover. Now let's take a look at the stock market. Obviously, if you look at the stock market here and this blue line is gold, you can see that we saw this little, recovery in the stock market. We saw this very clear consolidation point, and then now we have a recovery. And if you look on the longer term, you can see that this recovery actually just rejected a key resistance point that was previously a support on the stock market. So what does this tell me? Now, I'm purely talking about technical analysis here. I'm not talking about any market fundamentals. So, obviously if there's news on Twitter, Trump tweeting something, or if something comes out and makes the market skyrocket, that's not what I'm talking about here. This is purely just technical analysis standpoint. What I'm seeing here is that the stock market didn't have enough momentum, at least yet, to break through this resistance on its second test of it. So I would consider this little zone down here, right? This would be the first test of this resistance point. Now we're seeing a second test. Obviously we're right below it. I think we could see another dip in the stock market just purely based on the charts. Now, if we go back to gold, what would that mean? That would mean that the current correction that we're seeing since the stock market is going up, I think that gold could possibly rebound from the current level that it's at. And I'm not saying this is going to happen immediately, but this is something that could happen in the next couple of days or within the next week. And so, because right now Bitcoin and gold have the same little correction, I think that if there is some sort of correlation between these three, obviously it's not guaranteed, it's not something that's proven, but if there is some sort of correlation, then I think this would perfectly play into what I was saying earlier, where we could see the head and shoulders on Bitcoin, and then we could finally see that little recovery that I was talking about earlier in the video, back up to the possibly $11,000 level, and I think that could be very, very interesting to see. Now, let me talk about stop losses, as I know that's something else you guys really want to hear about. Now, as for stop losses, one of the most important things to understand about false breakouts, and specifically, the people that are causing these moves to happen. You saw this move right here, which was another false breakout from this point. You saw this move right here, which was another false breakout on Bitcoin. So we've had two false breakouts on Bitcoin. And so you have to understand what these people are trying to do, right? Right now, the market is in a very low volume zone. I've already explained this 2 times now in my previous 2 videos. However, what's happening is these traders who, maybe have a little bit more Bitcoin, who are trying to make larger trades, right? They need liquidity for their orders. If they have, say, 10 Bitcoin that they want to long at this level right here, if they stay within this wedge, they're not going to get enough liquidity. They long from, for example, this point right here without it breaking out of the wedge, then they're going to cause the market to move up, and they're not going to get as good of a price as if they make it crash below this level, right? Then they do their market order down here and then cause it to recover, and they access a huge liquidity pool right under the support point, because this is where all of the people's stop losses are. So that's what these people do, right? They have a bunch of Bitcoin. They want to buy into the market. They know that everyone sets their stop losses, right below or right above these levels. So they make the price go to those levels and break out of them so that they can access the liquidity for their own trades. So that is their incentive for this. So now you have to understand, well, how can I avoid getting my stop loss in these areas, right? If I'm, being transparent with my trades, it's something that I talked about earlier in my video on why I don't like indicators, right? The whole reason why I don't like indicators is because you're showing everyone what you're doing. And that's exactly what you're doing when you're setting your stop loss at an obvious level. If I set my stop loss, right above this resistance point right here, if I set my stop loss right here on my short, then everyone knows that I'm setting it there, because they know that, oh, okay, this is a key level for everyone with a short, because if it goes above this level, then, it'll break the downtrend, and now all of a sudden we have access to a lot of liquidity. So these people can see that, and it's very obvious on the chart, right? And so that's what they're able to take advantage of. So what you need to do is you need to randomize, or at least change the way that you set your stop losses so that they're not at such obvious levels. And so something I wanted to show today is a pretty cool indicator that I think a lot of you guys are going to like. And I think you'll find that most of the time it will really give you just as good stop loss points as if you were just putting them right above and below these support and resistance points. Now, let me talk a little bit about what would work the best with this stop loss strategy. Now, what would work the best with this stop loss strategy is obviously you can use this with trend trading. So this is something I talk a lot about on my channel. It's basically where you trade based on how the trend is moving. And so something you can do with this strategy is, for example, if I'm trading this trend right here, right? We have a very short-term trend. This is on 4-hour candles, and I see that we have this very clear trend line. Now, what you do not want to do is set your stop loss at a very obvious point right below the trend line. Like, for example, if I set it right there, right, or somewhere super, super close, then it's going to be a huge downside, because then everyone knows where my stop loss is, and you're not being very safe in terms of when you're trading. So what I can do instead to sort of randomize this, although obviously there's still actually sort of a mathematical reason as to where the stop loss is being placed, is you can use something called the ATR. And I am going to give some credit to No Nonsense Forex. This is a YouTuber that makes some great Forex trading videos, and this is an indicator that he recommends. And so basically what this is here is the indicator. This is what it looks like. It's called ATR. You can find it on TradingView or any other trading platform. And what this does is it gets the average of the previous X number of candles. So for example, the default settings of the ATR is 14 candles. And so this average here, right, says that on Bitcoin within a 4-hour candle in the past 14 candles, the average price move was $173. And so this is really useful because then you can use that information and determine where your stop loss is going to be set. Because most of the time, it only takes 1 or 2 candles of a specific time frame for a trade to be invalid, right? If I am saying that I want to long from this level, and then let's say that there are 1 or 2 more candles that go downwards, then there's a very high chance that that trade is no longer going to be valid and that I don't want to be in that trade anymore. So what you can do with this ATR, and there's actually a really cool indicator for this, is you can use something called the SL with ATR. So this just basically takes the ATR and calculates a stop loss point for you. So you can see the ATR period, that's what I was talking about earlier, the number of candles that it's taking to get the average, and then the factor value, so how many ATR you want to set your stop loss below the current price. So let me explain that in a minute. And then your entry price, and then whether it's a long or a short, and then the time frame. So there are a lot of settings here, but I'm going to talk through them right now. What you would do is you would first find your trade. So let's say I have a long at the current price, right? Now, this is a relatively short-term trade. I'm looking at 4-hour candles here. So what I'm going to do with this personal trade, I'm going to use the 4-hour time frame for the stop loss. So that is going to change the period of the ATR to the 4-hour time frame. I'm then going to set my entry at the current price, and then the factor value. So this basically takes whatever the average of the past 14 candles is, and it multiplies it by this number. Now 1.5, the reason why most people use that is because they're basically saying that if the certain number of candles afterwards moves 1.5 times the average, right, downwards in the opposite direction, then it's very likely that your trade is no longer valid. So I would just basically keep this at 1.5. The only thing I would really adjust here is your entry, whether it's a long or a short, and the time frame. So for a short-term trade on the 4-hour time frame, I'm going to use the 4-hour time frame for the stop loss point. Now, what you can see here is this little red line here. And what this red line means is where you would set your stop loss. So this is basically, in my opinion, this is actually a very, very good stop loss point for what you're doing right now, because this level right here, it's fairly random compared to what a lot of people who are looking for liquidity would do, right? I would say that the standard thing that people would do right now is probably just try to get below this resistance line, right? So that's where everyone else is setting their stop losses, right below this resistance line. Now you automatically have an advantage because you're set at this random point, right? This point changes all the time, so it's very hard for, someone who's trying to get a lot of liquidity to pinpoint exactly where your stop loss is. So you're at an advantage because your stop loss is set at a much more random level than everyone else, yet it's still set at a strategic level, right? There's a reason for why you're setting it here. It's because it's 1.5 times the ATR. And now let me give you another example with a longer term trade, because I think that's also important to talk about. So if I'm making a trade, for example, on the 1-day time frame here, obviously this is just an example. This is not a real trade that I would make. But if I were to make a trade here, then you can set this to the 1-day time frame, and you can see that it moves down the ATR quite a bit. So that's why I'm recommending this. If you were to make a long-term trade here, then I would do this. However, if you're making a short-term trade, I certainly would not set my stop loss, all the way down here. But basically what I'm saying is, the longer term the trade, the longer the time frame that you're going to set on the ATR calculator. And I will leave links down in the description down below to all of these indicators for TradingView. If you'd like to add them to your chart, they're completely free. I think this ATR stop loss indicator can be super useful for anyone who, maybe wants to switch up where they're placing their stop losses so that they aren't taken advantage of whenever these people are trying to manipulate the price and hit everyone's stop loss. Anyways, guys, hopefully you have enjoyed this video. Hopefully you now know a better indicator to set your stop losses with, as well as some Bitcoin analysis, and you now have a plan on how to trade Bitcoin. Anyways, guys, thank you guys so much for watching this video, and see you in the next one.